with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Chief Investment Officer at BIG Investment Services. That's BIG, Booth Investment Group. We're a full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, February 6, 2026. Let's just jump right into the numbers to kind of tell you what's been going on this week. It's been a bit of a roller coaster ride. Market was just all over the place. But let me just tell you how things finished. The Dow Jones worked its way up a little bit this week, up 2.5% on the week, up 4.2% on the year. So Dow Jones doing really well here year to date. S&P 500 finished the week pretty much flat, 0.09. But let me tell you, that's not what it looked like earlier this week. As a matter of fact, up until this morning, it had gotten crushed. It was down over 2% and negative on the year, but had a major rebound today and finished the day up 1.9% and back to positive for the year. But let me tell you something. It was a real roller coaster ride for the S&P this week. Same with the NASDAQ. It got hit very hard, still finished down for the week, down 1.8%. And the Russell Small Cap Index was up 2.1% this week, so finishing up pretty strong, continuing to do well here year to date. Volatility Index was up 1.8% on the week, but that does not tell the story because it was up over 20% on the week, midweek. It was just ripping higher as there was a lot of fear in the market. I'll tell you why here in just a moment. Looking at long-term bonds as measured by the TLT, up 0.47% this week, so up about 0.5%, kind of hanging there, not doing a whole lot either way. And when you take a look at the different sectors of the market, a mixed picture, okay, a mixed picture, but let me just say this, the defensive areas of the market have really been super strong. I mean, consumer staples, things that you need, not things that you want, but things that you need, up 5.3% this week, up 13.2% on the year. Consumer staples, energy up 4.3% on the week. It's up double digits year to date. These things are moving. They are absolutely moving. And then things like consumer discretionary down 2.6 and technology down 2. You know what this reminds me of a little bit, some of these numbers? It reminds me a little bit of the early days of the tech crash, okay? There was a period of time where the high-flying tech stocks rolled over. They started to underperform, and the Dow Jones went screaming higher. I remember it well. It was back in 2000, and the Dow Jones screaming higher, doing wonderfully, while tech stocks and the NASDAQ just started getting hammered. I'm not saying that's what's happening right now, but I'm just saying that it's very reminiscent. It looks familiar. I was there, okay? It looks familiar. We're seeing value stocks, defensive stocks do incredibly well. They're attracting a lot of money right now. I mean, then you look at the tech sector, the technology sector down 1.9% on the year, and you've got consumer staples up 13. How about gold and silver? Gold up 2% this week, silver down 7%. Silver really getting hit hard again this week. We talked about that. It was something we're staying away from, but we are watching gold. I think gold looks interesting. Not here, but I think that it can look interesting here longer term. Silver, not so much. Don't fully trust that one. So what moved markets this week? Well, the big story really was an AI story. There's been a lot. Well, we had that government shutdown, if you want to call it. I mean, a couple of days here where that was in limbo. I think I said President Trump kind of reminded me of a baby with a hammer when it comes to his tariff policies. Well, Congress is absolutely a baby with a hammer when it comes to this government shutdown stuff. It's really getting old. It really should not be allowed. I mean, really, if the government shuts down, then they shouldn't get paid and they shouldn't be allowed to leave until they fix it. But anyway, I digress. That happened. It really wasn't much of a market-moving story, in my opinion, but it was noise. We've had some economic data that's been interesting. Some manufacturing numbers a little bit better, but some job data doesn't look so great. Job openings numbers were really low. There's some private numbers regarding payroll that don't look so hot. We did not get a jobs number this week because of the government shutdown. We also didn't get an inflation number we were supposed to get. So those numbers will come next week. And I'll be watching that pretty close because some of this stuff I'm seeing surrounding the jobs market's a little bit questionable. So we'll see what happens here with the official jobs numbers. But the big story this week that really got this whole thing kind of imploding was a story that came out from a company called Anthropic. Anthropic is an AI company that builds software. You can just tell it what you want and it will make it. Well, they came out with a story how they've advanced their product to be able to do multiple things. And anyway, the market is a shoot first and ask questions later type of mechanism, right? If it gets shook up by something, it's just going to sell, and then it'll examine whether or not it should have sold after the fact. And that's exactly what started happening this week. Now, listen, we've already been in an environment that's been a little bit weak when it comes to risk appetite. I say that because I've been watching Bitcoin. Now, we don't invest in Bitcoin. We don't recommend Bitcoin. I just don't believe in it when it comes to its valuation because there's no intrinsic value in cryptocurrency. So it's just not my cup of tea. But I watch it because it is a good indicator of risk appetite in the market. And look, it's been getting crushed since the fall of last year. I mean, it's down from like 120,000, went down below 60,000 this week, right? Down almost 50%. It's been getting hammered. So the market's already been kind of like on edge. We've seen a lot of the high flying stocks not doing so well. We've seen Bitcoin not doing well, et cetera. But then the story hits and software companies just started getting absolutely obliterated. And it bled right into the rest of the market and caused the whole market to really take a hit and go down. And they're really punishing a lot of these tech-related stocks. That was really what drove it, and then finally kind of settled down a little bit here today. So listen, rather than go on and talk more about the broad market, we made a lot of moves this week. And I really need to take a moment to kind of share with you what we've done so you know what's going on with your money, right? That's the whole point of this show. So coming into the week, on Monday, I sold a big position out of AMD. We've had AMD for a while. We've had AMD for years. We've traded it. We bought some at 67 and sold some at 130. We did that a couple of times. And we bought some in the 90s. We sold some at 210. We bought some more last year, January 29th of last year for 116, and bought a whole lot more March of last year for 97. Well, the stock was up to $246 on Monday. So it's done incredibly well for us. We've crossed that 1 year long-term capital gain threshold for you taxable clients out there. And they were due to report earnings this week. And listen, Lisa Su's fantastic. I believe in the company, but I don't trust this market. You know that. I've been saying that. I don't trust it. It's been absolutely punishing when it sees anything it doesn't like. So we cut back on AMD. We sold about a third of the position on Monday. And I'm glad we did because guess what? They reported the earnings and the stock got hammered. It dropped 20% after earnings. Went all the way down around 192, 193 or whatever. It closed the week at 207. So I think it was a good move to trim them back when we did because it did get punished pretty badly. I thought the report was pretty good, but the market didn't like the fact that some of the numbers were generated by sales to China, and it felt that the growth in the U.S. was in line, and in line's not good enough. You got to do better than just hitting your target when it comes to Mr. Market. So we did that. By the way, for folks that are new or have added new money, we turned around and we bought it for you midweek. So we've got your position established because you didn't even own any yet. So for you new folks, we got that position purchased for you this week as well. As a matter of fact, all of you folks that are new or have added money to your portfolios, you got fully invested this week. We put all your money to work throughout the week this week. All right, the second big thing that we did, so we sold some AMD on Monday, and then we bought some Pinterest on Tuesday. That's right, Pinterest. So let me tell you why we did this one, okay? Couple things here. I was doing some anecdotal market research. Every now and then I'll ask the folks that work within our company, hey, what are your kids into? What are your kids doing these days? What are they into? And I guess it was a few months back, I asked this question, and I was told that they were all over Pinterest. I said, are you kidding me? Pinterest? So look, I looked at Pinterest a few years ago. My wife and I were doing a major project at our house, and I went there to get ideas because that's a good idea platform, evidently. So I went and I saw some great ideas, and I got incredibly frustrated. Why? Because all these great things I saw, I had to go try to find them on the internet. Where do you get a chair like that? Where does this come from? Where's that come from? And then you had to try to search for it by description. It was a very frustrating experience. Well, They have completely and totally revamped their system, completely turned this thing around, where now you can go to their boards, you can see ideas, and then you can click on what you see and be taken to a link to purchase. And guess what, folks? They're going to be making money on that. Not only are they doing that with user boards that are being created, they're also creating their own and doing product placement in that. And then on top of that, their international growth is exploding. On top of that, Gen Z, okay, that's a couple tiers down from yours truly here. Gen Z is all over Pinterest. They're using it like crazy. And then on top of that, they've had over 30% growth in the male segment. Guys are using it, looking for ideas on how to organize their garage or build out their man cave. So all of those things are going right for it. But here's what's really compelling. The stock is just stupid cheap. A PE in single digits, cash out the wazoo. Fundamentals are so rock solid. And then on top of that, how many times did I say on top of that in this little segment here? Too many times, I'm sure. But in addition to that, they announced about a week ago that they are cutting back some of their workforce because they're implementing more AI. Now, that's not so good for their workers that they're letting go, but it definitely should add more even to their bottom line, their profit margins. So we established a little bit more than a starter position. Normally when I buy a stock, a lot of times I like to do a starter position and then add more if it goes down. But the stock is so compelling, I didn't go with just a starter position. I bought 2/3 of what I want. They report earnings next week. And if it's a good number, I think the stock could be off to the races. I didn't want to miss it. And if it's a number that has anything in it that the market doesn't like, it'll go lower. And I've left us some room to buy some more if that happens. So I did that. Then on Wednesday, I bought more Uber. Okay, I bought more Uber. Why? Because the market, it was just one of the dumbest things I think I've ever seen. I've been doing this for a long time. And Uber's price action on Wednesday was just a complete, utterly stupid thing for the market to do. They reported a great quarter, tremendous growth. The CEO's killing it. Look, we bought this stock originally in May of 2024 for $63. I sold half the position in September of this past year for $97. The stock was all the way down in the low 70s on Wednesday, and for no good reason. They're killing it. They are doing a great job, and I thought they had strong guidance looking forward. In addition to that, they had a game plan for how they're going to incorporate driverless cars, which has been the big worry about this company. I've said time and time again that if anyone's going to benefit from driverless cars, it's probably going to be Uber. I mean, seriously. So we bought more Uber on Wednesday at $73, finished the week at 74, almost 75, so it came up a little bit. But I like this one a lot. We were able to add some more there. And then I bought some more ServiceNow. Did that today. ServiceNow, big software company, and I bought it because they've just been unfairly punished with this big software sell-off. Every software company out there has just gotten decimated, ServiceNow included. And let me tell you something. This Anthropic announcement was a big announcement. Don't get me wrong. But look, I've used an Anthropic-based engine to build my own program during the Christmas break time, okay? I built a program that listens to CNBC all day long, analyzes all the dialogue, and sends me an executive summary at the end of the day with all the things that I'm looking for regarding stock mentions, bullish, bearish, economic data, you name it. I got a whole little thing I did. And you know what? It went really smooth. It was pretty good, but there's a lot of glitches. It still took some work to muscle through it to get it right. I'm not a programmer, guys. I've never done anything like that in my life. So yeah, it took some work to make it all happen, and it's not that polished, and it's still a bit sloppy. Look, AI is far away here from destroying these software companies. And a company like ServiceNow with Bill McDermott, that's the type of company like Uber who's going to benefit from driverless cars. ServiceNow is going to work AI in, they are already doing it. They're working it into their platform. It's going to benefit them. I don't think it's going to hurt them. So a lot of these software companies were getting crushed much more so than they needed to. ServiceNow we've had for a while. We originally bought ServiceNow for $128 back in May of 24. And then we sold about a third of it, almost half of it in 2025, between $205 and $211. It's all the way down to $100 below what we originally bought it for. So a good time to add some more money to it. A lot of moves this week, folks. A lot of moves, did a lot of buying, did some selling, got new people worked in. So we did quite a bit of moves this week, but the market gave us those opportunities to do so. Where do we go from here? More earnings coming out next week, obviously. Some data coming out next week in regards to jobs. I simply do not trust this market. Had a big rally today, rebounded really, really strong today, but the NASDAQ has broken, folks. It's done a couple of things that make me believe that the next 6 to 12 months may not look so hot for the NASDAQ. Again, I'm not saying that this is a tech bubble all over again, but I'm not saying it either, right? Look, I learned from the past. I lived it. I watched it. I'm seeing consumer staples up double digits and the NASDAQ down on the year. So all this has my attention, and we're going to manage money with all that stuff in mind. So I don't fully trust the market, but I do think that it got punished pretty hard this week and rebounded. So we'll see how it goes. I like where things sit for us at the moment. We do have some more cash on hand, but I'm really not looking to do much more buying here. We'll see how some of these reports come. I may be looking to take this cash and put it somewhere to earn a little bit more interest, because when it comes to stocks and equities, I think we're really about where we want to be at the moment, barring some opportunities that might pop up with earnings. I know this is a long one, but there's a lot to cover. We made a lot of moves. I want to bring up the speed, let you know what was going on. So thanks for hanging with me. Thanks for listening in. Between now and next week, as you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it is go to Pinterest like Aubrey and Farah, the daughters of BIG, with all the great stock ideas. Maybe let's go to Pinterest and plan out that next huge home renovation that you plan on doing. Hey, maybe it's retire a little early or take that big trip. You know what your goals are. Don't just think about it. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.